All right. Good morning, everybody. It is 6:31. It is February 21st. You guys got to read the disclosure real quick. I know you're speed readers out there. A lot of people starting to watch this. I got to get a disclosure out there just to make sure that everyone's protected and whatnot. So let's get that off now. Let's see. I don't know how we do that. Let's go back to me. Okay, no. Let's go back to put this comments here. Okay. Let's go back to brand. All right, let's go. Scott's disclosure, add overlay, let's see, let's go comments. Let's go if I go back in. No. Let's see, how do we get back to Red Dog and off of this? Give me one more second. Chat is there. Okay. Disclosure still on. Brand is still there. Classic, no. Minimum, no. Let's back to that overlay. Let's see, stop sharing maybe. See if I can get me back in there. Save. This is when you need somebody to come in and help from afar. Let's see, I'm right there. Banners, no. Brand, no. Comments, yes. You guys can. All right. I see everyone coming in. You guys, I know, big day, big day. You just still see the disclosure, right? Let's see how we go back to me. Let's see if Mikey's awake. Mikey, hold on. Wait a minute. He's gonna yell at me probably for calling him early. Hold on. You guys can hear the back office going. Good morning, guys. Twitter's not showing the 6:30 club.
Please leave your message for 3, 4.
Mikey doesn't pick up. All right. Let's see. Hold on. I'm trying to get. What's up, Tony? What up, Rise and Grind? How do I get this off? Block it? No. Scott overlay. Hide. Oh, there we go. Am I back? Is Red Dog back? Can we see? What's up, Andres? What up, Ryan? What up, Steve? We got Mr. Doling on there. We got Tony Wallace. No, I'm not turning it off and restart. Did you guys see the Red Dog? How many fingers do I have up? Anybody? Yes. All right, good. I'm back. All right. Anyway, anybody know what's happening today? Any big earnings reports? Right? It's like the most telegraphed earnings report in the history of all history, right? Nvidia is coming out. Will they disappoint, or did they just shake up sentiment enough? I guess we shall see. I think what's spooking people right now is that PANW is down 23%, and cybersecurity was a very important sector, and if that could happen, I guess maybe AI semis. So we shall see. Besides that, you have things faltering, and everyone's talking about 2 weeks of historical downtime. So everyone is on their toes, and rightly so, right? So let's figure this out. Let's go back to the chart for a second here. If you go here, do you have a chart? Nope, we don't have a chart. All right, we're coming along. Share screen. There's the spies. Let's go entire screen. Double click, share. All right, you guys see the chart of the spies there? Everybody in comment section? Yes, everybody sees the chart of the spies. So what do we have going on here? You guys can see a lot of little things that I've taught, right? A lot of little things that I've taught in the last 20-something years, right? First, you had a little bit of a topping tail. Then you had the bottom tail. Then it filled the gap. Then you had a little Red Dog reversal lower high where, it got above the prior high, came in, and then yesterday broke below the 8-day. Okay, this morning, not a whole lot is happening. Obviously, actually, in the spies, but there is. The spies right now are down about, that's true. The reversal Thursday into Friday SMCI was huge. Spies are down $1.20, 495.51. Yesterday's low is 494. So right now we're just within this candle. Okay, so we'll see if it tries to hold it for a day or not. There are a lot of guys out there that I'm talking to are seeing flows, and they're thinking we have to at least see a move back to here, and then there's a chance that we create another channel, but we'll see. Either which way, not everything's working. The Qs also Guys, look at this wedge formation. I'm actually a little bit upset with myself because I don't know what I was doing on Friday besides managing, selling premium and SMCI puts, this, that. Bottom line is, you look at this candle on Friday, and sometimes like, what could you have done different coming into Monday, because we were pretty damn weak. You know, you had a candle that closed in the lows, that closed below Thursday's low, that closed below the 8-day, all little momentum signals that momentum was starting to, decrease and shift, small shifts of what you have to look at in order to make adjustments. And if you did so, you probably made a decent amount of money if you sold premium or bought some puts, or just had less risk on if you've been carrying it a lot of the time. So now we haven't really been below the 21-day this entire move. If you look at this entire rally since the November lows, right? Ever since right around here when it ignited, we have not been below the 21-day for more than, like 3 sessions, which was right here. Here we kissed it. Here we kissed it. So now the question is, do we stay below this spot? And a lot of it's going to have to do with, what happens with Nvidia after the close. Like, look at PANW. That's a big move. 23% lower. Okay. Last night I discussed it a little bit with you guys. I'm like, guys, look where the 200-day is here in PANW. And now a lot of cyber's getting hit. This is a leadership stock. Like, look how purchase looked like it was pretty much set up as nobody was thinking here that this thing was gonna, lower estimates, and they want to blame it on, getting a different structure, this and that. But the bottom line is, this has been a strong trend. So a lot of money's been hiding in here. And now here's your 200-day. This is 267. So 267-ish, probably be a spot to take a look at this morning, if it gets there. Or sometimes this is 267. This is what? This is 282. So with this kind of move and the speed, this is a zone. So this 280 to 260 zone is probably a spot that you might be able to look at long. And right now, PNW is it's right there. It's basically, so it just took back the entire move from the start of the year. So anyway, I'm probably going to just watch it, let it put a low in and see if it's worth it. Chances are I'm going to be trading, Nvidia and some of those, heading in. Like right now, Nvidia, people like, right now, what are we going to do with Nvidia? All right, let's chat. I don't know if everyone could see. No chart, no problem. You guys can't see the charts. Nvidia, so a lot of people, I'm looking at this chart, and we made a lot of money. I know I made a lot of money in SMC, in a lot of these things. But when it took out 500 all the way, this is your high area. This is 742 to 746 is where it's going to have to get above and stay above if we're going to have a rock star report. And there's chatter of a stocks, but I'm not saying it's going to happen. I don't know. Okay, what I was looking at yesterday is, I was trying to price out, low, like inexpensive ways to play it if it's going to, go up 100 points or down 100 points, because, there's a lot of premium, and it's hard just to buy options because of such a premium. You almost have to do a call spread, so the higher strike covers your cost both ways. What you could do is, I was looking like, if you play this with earnings with options, if you think you're going to miss like a big move, and obviously they're pricing an 11% move, so there's a big move there. So you could actually, like, just say, I'm not saying to do it, like right now, the options for like the 750s, when I looked, like, you could do a 750 by 770 call spread, right? That'll cost you $2.50, where if it gets above 770, you're making probably $17.50. So you could risk $2,500 to make $17,500, or you could risk, you could do 10, 20, you could do whatever you want. I'm just saying that's the ratio. So not a bad ratio. 250 to make 1750 if you do a 750 by 770. Or if you think it's going to miss and you think it's going to get crushed, then you could probably do the same thing. I was looking at the 600s yesterday, which again, Palo Alto can get to the 200-day. I'm not saying, this is your 50-day below. You could buy the 600s or something like that, and sell the 580s, and it'll cost you $250 to make $17.50. So that risk reward isn't bad. Or if you don't know which way it's going to go, and you just think it's going to have a 100-point plus move, you could buy a call spread and a put spread, and then you just need one of them to cover the next, and you make a little bit less, and you could still make probably 10 points. And that's a way to do it. Or you just wait for the print and trade it after hours. Support. Well, this is micro support. This is not support after earnings. After earnings, if they're just like in line and then they underwhelm, this is not gonna be an area that holds. You're talking, the 50-day at least. So I would say this is probably more of support, okay, which is closer to 600. The 677 might just be pre pre-print, and right now Nvidia is trading down 11. The question for some guys like, hey, Red Dog, can we play this red to green today? Maybe. SMCI is down 30. Okay, so it'll be interesting to see what they do with these. Do they want to, discount them further prior to the print later, or run them green? Yesterday, it looked like at the end of the day, SMCI was going to go green with Nvidia. So having it down 11 because people are kind of scared of what just happened here with PNW. That could be a gift for the morning trade, but we'll see. That's just kind of a thought. Yesterday, I did talk to everyone in the Alpha team. Some guys, when SMCI was down near 700, I'm like, well, it just went from 1077 to 700. If you think they're de-risking and then Nvidia is going to be awesome and it's going to go up, by the $800 calls yesterday for $20, and they wound up going to 55 yesterday. So there's a lot of action here. Yes, there's risk and reward and there's movement, but as an active trader, you need things that move. So bottom line is, if you think you're going to miss a move in Nvidia above 745-ish, what you want to do is you want to buy options when the stock is down, so you're paying less. And obviously SMCI will be pushed around, and so will ARM based on the reaction to Nvidia. And we'll obviously see what happens. Right now I have nothing on. Right now I'm in my head trying to figure out a low-cost way to trade them, because again, I have a service with the Alpha team and everyone wants ideas and we're all trying to make money, but we do it calculated. We do not sell calls into an earnings event, and we do not sell puts. That's unlimited risk. Even though the premiums are high and they look so juicy to sell them, the reason why they're high is because they know that they're going to be responsible for whatever the big move is. And the only way you really lose if you do a call spread is if everything is tight. Why not play AMD? You could do that. You could play a bunch of them. You could play ARM. ARM also is into support. ARM right now is as high as 164, went as low as 115.50 yesterday, so you can lower this. And ARM right now is trading on 117. If they try and take Nvidia green this morning, you probably could play ARM also. It's still in this pocket pivot. A lot of great trades. If its earnings happen here, still boom. It's just consolidating. So a lot of these things are in consolidation mode. But again, it's not for the faint of heart. You could do the SOX. So there are so many derivatives off of this Nvidia news. That's going to happen after the close. You just see that you're either picking a direction, so you spend less. But then if you're wrong, you're wrong. Or you could figure out a way where you're just trying to play a big move, and it costs you a little bit more because you're not picking a direction, and then you just need a big move to cover some, and then you're still in the game. Or you could just wait till tomorrow. Let the dust settle, and we've played these, these pro gap plays, right? So if you go to somewhere in this 630 club, Mike tells me there's a link to my, to the what's called the ebook on pro gap earnings plays, because once the earnings are out of the way, there's a way to play. Like, look, ARM, once earnings are out of the way, you could have been buying versus the pro gap and then adding when it took out the pro, the post earnings high, and had a big move without having to play this. So I have a whole ebook that you can click on that's in, I guess the title area if you want to look at that. But anyway, so some people are saying now, Red Dog, let's switch gears to Amazon. Amazon is holding the pro earnings gap, right? Which if you click in the title of this thing, the ebook's right there. You can get it for free. So now Amazon is up 2 because they got added to the Dow. Some people are like, hey, Red Dog, isn't that the kiss of death? Added to the Dow, that means it's a mature company. It's not a growth company anymore. Oh, wait, that's not true. Granted, yes, the perception of being in the Dow and the best growth days are behind it. It's not, to me, that's really not true. But What it does is it adds extra buying because now it's weighted to the Dow, so there are funds out there that have to buy it mechanically, and that, you know what that does? That helps Jeff and McKenzie have some liquidity, so they're selling it to the indexers, and that could probably help Amazon moving forward. So I would not, get away from Amazon. I actually am not in Amazon. I got out yesterday, which kind of hurts, but it is what it is. I'm over it. I'm not letting it dictate my day. Who knows? I might even buy Amazon up $2 if it shows it can hold up. It's still, it was just at 170, so here at 169. Anyway, I probably shouldn't get out of it, but I just, because it still held a portion here. But I think it being in the Dows will at some point help it. It's still a cash generating machine, and that'll help create liquidity. It's not chilling, Christopher. He mechanically has to sell. Why would he? He's not going to, donate his percentage of Amazon stock to his kids, and he can't donate Amazon stock to charity. So what he's doing is he's selling portions each year to diversify into his space projects, giving it to charity, so he could look like this, awesome guy, which is great. He did great. Congratulations to him. But I'm saying he's not selling Amazon because he sees something in the future that's bad for Amazon. He's selling it because he founded this company and he owns such a huge percentage and he has to sell it. So don't think that just because he's selling it, you should sell it. You should say, hey, when he's done selling for the year, less supply, more demand, stocks should go higher. But we'll see. Yes, he sold a ton. He's probably almost done. So Amazon still looks okay. You know what else looks okay, even though it hurt on Friday? Meta still looks okay. Meta, hit a high of 488 on Thursday. Friday, as much as it hurt just because I had a lot of it on, it really, all it did is hold the 8-day and still above the pro earnings gap. So if you were looking at something that still is constructive, also, Meta, which is down 2 today, is constructive. So I'm trying to find constructive situations that are acting sort of special, but we're running out of those. So when we're running out of special scenarios, that means the market's getting faultier. That means you might want to be careful with less risk and less position. You know what I'm saying? So if you look at the Qs, which we just spoke about, yeah, the Qs broke this inside wedge. If Nvidia is just in line and doesn't beat by enough, the Qs could be 414 to 416 tomorrow. So you have to be careful. Like today's a big day. I have a lot less on position-wise because things have started to get harder to hold. So when it's harder to hold and not rewarding me for being a portfolio approach because I get paid for a living monthly and quarterly, I have less on. IWM getting a little sloppy, so it's not the end of the world, but IWM was a head scratcher. You had a hot CPI, a hot PPI, and rates went up and IWM ignored it. But then, once the mechanics of the short squeeze was over, it came in a little bit. So I would say, what's this? This is 196.23. IWM right now is what? Last I looked, it was down 80 cents. So what's yesterday's low? Yesterday's low is 198. So we'll see if that holds. If not, it's just going to get choppier. So some already starting to point to a double top. It's over. I don't think it's over. I just think that, economy's still running hot and the Fed can't cut what the street said it was going to cut. The street said 5 times. No freaking way. Maybe 3. That's already priced in. You could load up on puts, Bols. I know a lot of people are loading up on puts. I would say guys in my alpha team yesterday were saying that yesterday they positioned into a sugar honey iced tea load of SPY calls. Puts, thinking that we're going to see at least 490 to 492, which could happen, or even this again. But at this point, it hasn't happened yet. Everyone that's been doing that the entire time is getting beat up. Every time it's looked like, look at this candle, looked like we were over, that happened. So we finally got to get a move below the 8-day, and then it has to stay below. Okay, so today into tomorrow is very big. If again, the semis get beat up and follow the cyber stocks and the mega tech, this and that, chances are you might start a new sequence to the downside, which would be fine. I'm cool with that. Tesla's been a pain. Tesla is not special. Some people are like, hey, Red Dog, you said Tesla, had an inverted head and shoulders pattern, and it did, and that inverse head and shoulders pattern gave you a move to 203. Okay, you have to know this was this was the spot that triggered to buy when it got above this area, okay, which you also had, by the way. You could have bought weakness those 2 days, and it gave you a move to 196 to 203. Bottom line is Tesla is a laggard. It is not the Tesla of old. It is not the leader like it was back in May of last year. Okay, this candlestick and it below the moving averages, kept it out of the way, and then finally it got above it, and you had a spot to sell into 203. That's what on Friday in my note, I would think you should be a seller at 202, 203, not a buyer. And then yesterday kind of came in a little bit more than I would have liked, but at this point you have 189. So if you're still long Tesla, I would say Tesla has to hold. It's down only 80 cents this morning, which isn't bad. So chances are this goes green. It's not where the weakness is. The weakness is in cyber. The focus is on AI semis. So Tesla's only down 80 cents. That's not so bad. So maybe that goes red to green. I would say if you're long Tesla and you're active, 189 could be your stop now. That's fine. I'm hoping that this Goldman Sachs, could finally break out. Look at this, Goldman Sachs going sideways since December 14th. It's been going sideways, messing with everyone. So for me, I have two different sets of calls on because I feel like when it goes, it's going to be hard to grab, and it might not go. But I'd rather have risk premium pay. Like I know most of my guys bought a ton on this breakout day, right? It looked like it was finally clearing the channel, and then that happened. That's hard predatory trading. So Goldman Sachs is a hard trader, but it seems like, it could be ready to go. What's it doing this morning? Yesterday I played it to go red to green. This morning it's down a whole 4 cents. So hey, it could be soon. The market's got to do something. But bottom line is you have JP Morgan making highs above the 8-day, another bull. Unless this is just a trap, which I've seen a lot of traps in the market also. I got to believe that Goldman is, could be something to at least keep on your radar for a close above 389.50. Just that's something that I focused on a little bit lately, outside of my semiconductors and the Nvidia and the ARM and the SMCI and the Amazon and the Meta. Anyway, Vert is out now down 6. All right, well, that's not good. Vert's been kind of a leader, down 6%, down 457. Vert, it's been a good strong stock. So little by little, a lot of these things are faltering. So that could be a signal that you got to have some risk down. Okay, don't get caught with your pants down. That doesn't look so good. Oh, ON is still doing pretty well. I wanted to buy more options. It didn't come in enough for me to buy more options. If you remember, we bought a lot of stock at 28. I bought the $30 calls for $1.25. We went to 31 and change. I sold the third above 33. I was texting who, telling them that I'm down to my last third, that the options are up 400%. I sold some above 4, and the stock's up 15, and that's my tier system. If you're going to be in this market for 22 to 25 years, you need a tier system. You need to net money. You need to let trailers go for bigger moves, and then use stops when the trade changes, not turn into a noodle, right? And disappear. But anyway, we won't get into any of that stuff. Chevron's ready to explode. All right, I'll take a look at that because I know a lot of people made some money with Oxy. Chevron's ready to explode. This doesn't look ready to explode. I would say you had a nice day, in Chevron here. As long as it holds above this spot, maybe it stays in play. Ready to explode. Not really the language I would use there. What about Oxy? Oxy's kind of similar. You had a move up into the downtrend, and these things have not been great. They're acting a little bit better. Energy's acting a little bit better. Don't get me wrong, but it's got to get above and stay above this 60. Some guys played XLE also. It's tough. I've been saying for a while, you can be long versus 82, buy above 85, went to 86. If you didn't sell some, it's already right back to the breakout where it's got to hold. Otherwise, energy's going to continue to lag and not be the place to be. So I hear you. XBI, by the way, I have a call spread on an XBI. I went with the XBI for the BIOS instead of the IWM. But we'll see. Some guys are like, hey, Red Dog, doesn't this look like a cup and handle? Which it does. So I was like, I don't know exactly, when the market's overbought and feels like correct. If the spies and the Qs are incorrect, chances are it's going to be hard for the XBI and IWM to do anything. So you have some cross currents here. So I'm not sure exactly when it could happen, but you do have a nice upper channel here. Question is, how long is it going to have to stay in it? Sometimes it stays in longer than you would want. So I have a call spread on for 3 weeks out, 95 by 100. And if it closes above 94, that's when I'll buy it. If you look at the weekly chart of the XBI, you'll see, looks like you have a nice little, channel here. Got above, a bull flag above this. Seems like you can get to 105 if the market hangs in there and if the market rotates. For me, usually when I'm in options, I'm waiting for something to play out. When I'm in options and then I go with the ETF also, I'm in both. That means it's in motion. The play is turned on, and I'm trying to make money both ways. For right now, it's just kind of an idea, and I'm not sure whether or not it's going to need more time. That's that there. Oh my God, it's 6:57. Guys, I got to jump. Bottom line is, there's a lot riding on today. We've lost a lot of momentum in some mega cap. Remember, the mega cap 7 is turned into the Fab 4. That means 3 stocks are no longer acting well, and that includes Apple. Make sure Apple holds 180. Then you have some semiconductors that have broken, and the fever broke like SMCI last Thursday, Friday. So Nvidia is important. Now you have PANW down 23%. So you're in a spot where, be very, very selective. Don't throw sugar honey iced tea against the wall. When the trade changes, you change. Have some stops, have some hedges, and know your time frame. I have like 4 different time frames that I operate on. I will be putting monthly flows in forever, or at least until I'm 59. I'm 51 in my 401k, my wife's 403b. I also have a blood in the street account that I put to work probably 10 plus times since 2018 that went to cash, that I'd love to see a 5% pull off on high so I can start tearing that back in because it's in a 3.7% rider. And then for a living, it's February 21st. I get paid monthly and quarterly. How do I do that? With an active account, a swing account, a box account, and an option account. So I have 4 accounts, 4 different ways to play the market depending on what's happening. That hopefully adds up into a nice paycheck. And I do need that because I trade for a living. I'm not just on Fox Business, Benzinga, this and that, talking, to talk. I talk about what I'm doing and how I'm doing it because I have ADHD. I could do 100 things at once. So I could, I could streamline it to you guys too and hopefully help you. And the reason why I show you my sauna, my ice barrel, is because it helps keep me fresh. It's my rinse. If you don't do your rinse, you can't do your repeat. And we got to rinse and repeat every day. And you do it in a way that makes you happy and keeps you sane. And, so I try and just let you know how I do it. Anyway, bull, I'll see you later. Get it done. Bitcoin is, as long as it holds 51,000-ish, it looks good. Another little bull flag above the 8-day. I'm not going to put the chart up. Space, love you. You're always around. Your routine is strong as well. Christopher, you're right. Nvidia will dictate the sentiment tomorrow. There's a lot of different ways to do it. But I will say is don't have FOMO and don't do anything that's irresponsible. And if you're not where you want to be into today, don't just say, I'm going to do this. And if it's right, I'll make money. If it's wrong, I'll be in a bigger hole. I don't care. That's how you get put out of the business. And that's how, you get to the edge of the cliff, which none of us should be on because life's awesome. And, there's always a way out if you look for help. Later, guys. I appreciate you.